Have you ever noticed how a calm mind can really set the stage for a good night's sleep? That's the idea behind our new podcast, Good Sleep. Greg, our host from Optimal Relationships Daily, is here to help ease you into a peaceful night's rest with some positive affirmations. And these affirmations aren't just comforting. They can help ease anxiety and nurture positive thoughts, setting you up for true good sleep. So press play on Good Sleep tonight, because a good tomorrow starts with a good night's sleep. Just search for Good Sleep in your podcast app and be sure to pick the one from Optimal Living Daily. This is Optimal Finance Daily, episode 2470, Top Strategies to Pay Off Student Loans in 5 Years, by Caitlin C. with StudentLoanPlanner.com. And I'm your host and personal finance enthusiast, Diana Merriam. Now let's get right to it and continue optimizing your life. Top Strategies to Pay Off Student Loans in 5 Years, by Caitlin C. with StudentLoanPlanner.com. Whether you have a few $1,000s in student debt from your undergraduate degree or a 6-figure loan balance, there are many emotional and financial benefits to paying off your student loans early. For private student loans, repayment terms typically range from 5 to 20 years. For federal loans, repayment options range from a 10-year repayment plan up to 20 or 25 years on an income-driven repayment plan. In some cases, borrowers can make payments for up to 30 years under a graduated repayment plan. But that's a long time to carry around the burden of student debt. Many borrowers choose to aggressively pay off their student loans within a short time. Here's how to pay off student loans in 5 years. Paying off your student loan in 5 years can save you thousands of dollars in interest, but it can also reduce negative mental health effects and free up funds that can be used for other financial goals, such as saving up to buy a house or planning for retirement. Here are a handful of strategies to help you pay off your student loans in 5 years. Number 1, get motivated by using a student loan payoff calculator. If you want to pay off your student loans as quickly as possible, you need a clear picture of your current repayment plan and how extra payments will affect it. Visually seeing how much interest you can save can be extremely motivating and set the tone for your payoff journey. Let's say you owe $50,000 with an average interest rate of 6% on a 10-year repayment term. Your current monthly payment is roughly $555. Using our student loan payoff calculator, you can calculate that by making an extra payment of $400 per month, you can pay off your total balance within 5 years. You'll save about $8,500 in interest over the life of your loan and rid yourself of student debt forever. Number 2, use the student loan refinancing ladder. If you're motivated to pay off your student loans aggressively, consider refinancing. A student loan refinance is a great way to reduce interest and score a cashback bonus that can help pay down your loans even faster. Many borrowers only refinance one time throughout the life of their loans, but you could be missing out on big student loan interest savings and cashback bonuses by limiting yourself to only one refinance. There's a refinancing strategy that's often overlooked by student loan borrowers, and it can help you pay off your student loan in 5 years. It's called the Student Loan Refinancing Ladder. Here's an overview of how the refinancing ladder works. Number 1, start by refinancing to a long-term loan. This might seem counterintuitive considering you want to pay off your student loans in 5 years. However, refinancing to a long-term loan, such as a 20-year term, allows you to get a better interest rate than your current loan, while also giving you the flexibility to pay less towards your student loans if needed. Paying off your loans in 5 years is a great plan, but life can get in the way. The long-term loan provides a safety net. Number 2, make big prepayments to cut your balance. Even though you have low minimum payments, make as large of a payment as you can. This will aggressively pay down your loan principal balance. Number 3, refinance again to a lower interest rate. Once you've knocked out a big portion of your loans, refinance to a shorter repayment term, such as 7, 10, or a 15-year term, with a new lender. Your monthly payment shouldn't change too much since your total balance is significantly lower from making large prepayments during your first refinance. Number 4, continue making those big prepayments. Keep chipping away at your balance by making large additional payments. And number 5, refinance a third time to a 5-year term. Once your loan is 1/3 or less than your original loan balance, refinance to a 5-year fixed or variable rate loan with a different lender. It's important to refinance with a new private lender each time you use this approach. If you use one of our partner lenders, you might be eligible for huge cashback bonuses that can be used to reduce your loan balance. Number 3, make sure you're receiving student loan discounts. This is a simple way to ensure more of your payment is going to principal rather than interest. Most lenders offer an auto pay discount, such as a 0.25% interest rate reduction, just for signing up for automatic payments. Your lender might offer other discounts, such as a loyalty discount for using multiple financial products. Be sure to check directly with your lender or loan servicer to determine if you're eligible for any student loan discounts that can save you money. Number 4, look for ways to save within your budget. One of the key components of paying your student loan in 5 years is making large extra payments. But where does that extra money come from? Start by examining your current budget to look for ways to lower your expenses. Dedicate any savings you find to your student loans. Many expenses can be reduced without any major lifestyle changes. For example, there are often promotions or updated costs for service providers, such as cell phone and internet, that you likely won't know about unless you do your own research and request an adjustment directly. Additionally, weigh whether you can cut some expenses altogether for the next several years. Common budget items that can be reduced or eliminated entirely might include landscaping costs, subscription products, gym memberships, and salon services. Other ways to lower your expenses might include adjusting budgeting categories like food, transportation, and entertainment, getting a roommate to share housing costs like rent and utilities, or trading your expensive car payments for a used car that's paid off or one with much lower monthly payments. If you live in an area with good public transportation options, consider ditching your vehicle for the next few years while you pay down your student loans. Every dollar counts when you're making sacrifices to pay off your student loan balance in 5 years. Rework your budget to a level you're comfortable with, and then look for other ways to bring in money. And number 5, boost your income and your student loan payment with a side hustle. If you've trimmed your budget as much as possible, consider ways to increase your income. You might be able to negotiate a raise or pick up extra shifts with your current employer. Alternatively, you can pay off your student loans with a side hustle. We have a whole series focused on side hustles for high debt professions like occupational therapists, dentists, and teachers. You can choose a strategic side hustle that uses your existing skills and credentials, or pick one that provides a creative outlet or new learning opportunity. Consider picking up some smaller side hustles that don't require a ton of time or energy, such as dog walking or house sitting. Then throw any extra money you earn towards paying down your student debt balance for the next 5 years. Other ways to pay off your student loans early. Depending on your profession, you might be eligible for various student loan repayment assistance programs that can shave off a significant amount of your student debt. For example, some states offer student loan forgiveness programs for teachers, lawyers, and healthcare professionals in vulnerable communities. Additionally, check with your employer to see if it offers a student loan repayment program for its employees. These types of loan programs are becoming more popular as employers recognize their recruitment and retention value. You just listened to the post titled Top Strategies to Pay Off Student Loans in 5 Years by Caitlin C. with StudentLoanPlanner.com. While it may feel daunting, I'm a huge fan of aggressively paying off debt, aside from a low-interest mortgage. There's something really straightforward and satisfyingly simple about this financial goal. Other goals like investing or retiring early can be more complicated, but paying off debt aggressively taught me so many skills that have served me well ever since. It forced me to learn how to budget and really pay attention to the inflows and outflows of money. It required me to organize my finances better. I also learned how to be frugal and reduce expenses so that I would have more funds available to throw at my debt. And finally, it gave me a ton of confidence. Seeing that I could accomplish a lofty goal allowed me to aim higher. When I took out student loans, I put exactly zero thought into how I was going to pay them back. I just assumed I would figure it out later. And when I did finally tackle them, I didn't really approach it in the most optimal way. I treated them the same as credit card debt and just threw money at them until they were gone. I was not knowledgeable about all the different repayment options for student loans. If I were to do it over again, I would absolutely look at a service like the Student Loan Planner to analyze my loans and situation to help me understand the most optimal repayment option. And that should do it for today. Have a happy rest of your day, and I'll see you on the Thursday show tomorrow, where your optimal life awaits.